going to have a global conversation about investment. How do we get, so there are 4 topics we always dig into at the Sun Valley Forum every year: energy, food and agriculture, communication and public engagement, and investment. How do we align the capital to the right things that we need to get to happen across the world? And leading our first conversation on this is going to be Julie Schaefer-Davitz. And Julie has been with us since 2016, the second forum. She is the head of impact solutions for Bank of the West, BNP Paribas. The thing to know about this is that she is the epitome of the partner and the sponsor of the Sun Valley Forum, because these are partners in curation and in action year-round. BNP Paribas Bank of the West was rated #1 by the Sierra Club if you care about these issues. They committed to divestment from fossil fuels a year ago globally. They were rated the #1 bank for world's best bank for corporate responsibility by Euromoney just a couple of months ago. So when you think about, yes, when you think about where is your money sleep, they have a great ad campaign that they just launched. What in the world is your bank financing? And there's a really great one that says, what is your bank financing on Monday what you marched against on Sunday? So think about that as we think about where our money sleeps. So with that, I wanted to introduce Julie Schaefer-Davitz to lead this conversation with 2 incredible women.
So I'm going to do something today that my mother told me I should never do, and that is talk about money in public. So, and I'm here with 2 of my all-time favorite people, and as we sit here today, at the risk of being too boastful, I'd like to say that we really represent the future of finance. We are representing really capitalism in transition. So I have Jen Kenning here next to me, who's the founder and CEO of Align Capital. And I have Daniela Fernandez, who's the founder and CEO of Sustainable Oceans Alliance. In full disclosure, I've worked closely with both of them, and we're of similar mindset. But what we really hope to do today is to show you that there are solutions. We've talked about a lot of different vision. We've been incredibly inspired. But at the end of the day, none of this can happen without money. And that's institutional money, that's family wealth, that is supporting entrepreneurs. So we're really going to dig into that and look at what does that mean, what can we do, what's happening now, and what are the calls to action so we can actually make this happen instead of just talking about it. So Jen, I'll start with you. I'd like to know, what started all of this for you? And we all have our challenges. But how did it all kick off for you?
Yeah, I mean, the short version is that 2 families came to me over a decade ago and said that they wanted to navigate the impact landscape at the time. They weren't satisfied with their philanthropic dollars. They wanted to start engaging their corpus and their other entities in the conversation, and that really began the journey. By the 4th country that I had witnessed extreme poverty and an environmental crisis over a decade ago, I knew that we had to start moving money in this direction. And there's no better place than with family offices. Individual investors have more than they need, foundations and donor advised funds. But for me, it's really the why is we actually have enough money in the system. We just don't deploy it in the right way. We don't allocate it appropriately. We're not using all asset classes. We're not using the entire spectrum of capital. It's about 7.8 billion people on this planet working for the 7.8 billion people today, as well as the 9.3 billion in 20 years. It's also about 2 billion people that live below the poverty line that are going to be impacted drastically. And lastly, we can't do it at the expense of the environment.
Right.
So we have a tremendous opportunity with technology, systems, to take policy, system change, and product to transform these problems.
So Daniela, that really speaks to you. And what brought you? I should just mention that Daniela was named one of Forbes 30 under 30. So we're really, really quite proud of your work.
Thank you. So what brought me here, before all of you today, was a frustration I felt with the system. I think a lot of people say, follow your passion. For me, it was like follow your rage. I was so angry. I was so angry and frustrated that we were pointing the finger at government and at corporations that were supposed to do the right thing. And we as people, and specifically my generation, wasn't taking ownership of the problem, and we also were not receiving the right toolkits to do something that mattered for our environments, for our ocean. And so my why is I believe that if we nurture and support entrepreneurs early on, we can then create those business models. We can create those systematic changes that we need to have as a society, because we don't have to harm the planet to do good and
Right.
to meet the bottom line. We simply don't. It's all a matter of redesigning models, building new ecosystems of change. I think everyone here will agree with that.
I think that's true. And one of the things we talked about earlier is this idea of capital stack. And that's also what the three of us represent here. As a financial institution, as a wealth advisor, and as entrepreneurial and nonprofit. Uh, Louis, the fabulous filmmaker, earlier mentioned that we needed 10% of a shift in order for something to be adopted. And with my institutional hat on, I can say that, you know, at least our bank is doing that. But what else do you see in the environment? How do we move more money through this capital chain?
Yeah, I mean, I think you have to actually look at your capital from three different angles. One is, where do you consume? Because consumption dollars drive profits, right? Second is, where are you investing, right? You're investing your money, whether you just have a 401k or even a bank account. That actually is invested in ways that probably contradict your values, right? Up to, are you a foundation who's only looking really at their 5% and they're not looking at the 95%? We then have this philanthropic bucket. To make it really clear, we give away around $360 billion a year. 70% of that goes to religious organizations, universities, and hospitals. That leaves us $120 billion to solve all these problems that we've witnessed over the last day and a half. We have over $100 trillion in the capital markets. If we move 10% of that capital, we could get there. We're not moving our capital fast enough. We as investors, as consumers, as banking customers, need to demand that our banks, our institutions, and our advisors start taking this very seriously. And you can do that by actually starting to look to see what you own.
Yeah. And speaking of risk capital, which I feel very strongly about, I spend probably too much of my time talking to boards and explaining that they can use their donor advised fund endowment, their nonprofit endowment, their foundation endowment towards these issues. How are you working with that, Daniela, to support your organization?
Yeah, the biggest challenge we've had is that, first of all, when people think about ocean technology, right? How many of you have heard ocean tech as a sector? Very few people. And so when you think about, being an entrepreneur, you have to, build a plane as you're, flying it. For us, we had to build the plane industry before we even flew the plane, because ocean tech wasn't an industry. When you look at the maritime sector, you had the Navy and you had a lot of funding going into that specific area. But when you look at ocean tech nowadays, it's doing good for the ocean and making it sustainable, but also making it profitable. So first, we have to make sure that investors understand that if you're investing in these ocean tech companies, it's not charity. It's something that would be profitable down the line. But when you look at the ocean tech finance landscape, only 1% of the financiers are angels. 1%.
Wow.
Then you have 19%, which is accelerators, which is what we do. We accelerate entrepreneurs. We provide them with seed capital. And then you have about 40%, which are VCs. But if you look at the spectrum, companies fail even before they get to the VC level, right? So you have these enormous gaps of capital that need to be filled, and starting with risk capital is one of them.
And that brings up another good point that what I hear, probably you hear as well daily, is that there's no deal flow. There's no deal flow. That's simply wrong. There is so much deal flow. There are ways for every single person to invest in every single topic that we've heard about so far since this conference began, at every level, in every asset class. And Jen, I know you had talked
Yeah.
about the recent family office report.
Yeah, I mean, the Fox Family Office report states that 90% of families aren't making investments because they don't see enough good deal flow. My argument to that would be 90% of what we see in the traditional markets isn't great deal flow either, isn't great investments, right? So we have the same issue here. I think where it gets murky is we have really three myths that we need to dispel, and I'll do so really quickly right now. Number one, you don't need to sacrifice return to invest this way, but you do need to do really solid due diligence in order to get the returns that you're seeking. Number two, we have plenty of deal flow. We need to start using our different capital stacks. What is the capital for across the spectrum? So when we have an accelerator model, we should be using our PRI capital, our recoverable grants, our MRI capital in order to fund these companies so that they have the ability to get to growth to ultimately scale, so that they can get from a seed company to a series A, B, C, and a public company. Without that early stage capital, we can't get there. So that's just asset placement, making sure you're using the right assets that you have at your disposal. And then last is everyone still thinks they should keep their philanthropy and their investing separate. That's old school. We need all of the capital. We need to be funding at philanthropic grant levels a lot of the things we've seen over the last day and a half. And then we need to move into different types of capital, right? Fixed income into equities, into private equities. When we start doing it across asset classes in the right buckets and using all of our capital at our disposal, we'll start to move the capital in the direction that we need to. And people like Daniela will be able to get the funding for the companies that they're spending, a ton of time vetting, getting through their system, and actually giving them the right technical assistance to set them up for success.
Right, because as a financial institution, I can't look at projects really below 30 million when we do a lot of project finance around energy transition. But Daniela is bringing these fabulous startups, and we need to get to them. We need to seed them so that they can come to institutions, so that we really can have these life-changing opportunities.
Yeah, and just to touch upon deal flow, we currently have young people in 165 countries that are working on the ground on these ocean solutions, right? So when you hear that there's no deal flow, there's definitely deal flow. We had over 300 companies apply to our accelerator program that is taking place in San Francisco, and we only had slots for 15, right? So there's definitely opportunity for us to do more in the financing capital side, but we also need active investors because, like I said earlier, this isn't a sector that you can be a passive investor and throw in some money in a company and then hope that they'll succeed. You have to be there to mentor them, to support them, to open your networks because it's a very nascent industry.
And when we kicked off this conversation, we started talking about what brought you to this, and that just reminded me that this combination of philanthropic and for-profit dollars is exactly what brought me to the position I am today. I was in philanthropy for many years. I led a large charitable foundation, but I was so frustrated by the inefficiency of those dollars, I just couldn't stand it any longer, and have moved onto another direction. But it really is about blended capital. That's desperate. I think the other thing that we need to touch on is the challenges that all of us, I think, face with wealth advisors. Can you guys speak to that?
You want me to go first? Sure. So most people defer to their wealth advisor to set their financial plan, their goals and objectives, their asset allocation, their capital market expectations, and then they build you a portfolio, and then you're actually not sure what you own. So if your wealth advisor is not proactive in this conversation, I would challenge you to go ask them to start to be proactive. Start by asking them what you own. If you don't own any companies directly that they believe are negative in some nature, you should ask what you own in your mutual funds. Keep digging. Go underneath the hood. If their response to you is don't worry about it, you don't have a high carbon intensive portfolio, you should actually be worried about it because you probably do. Right? So a lot of this is education. The education and the movement actually gets built by us as the investors. When I mean us, I mean all of us, right? Asking the right questions so that we can be informed investors, educated and informed consumers. The last thing I would say on that is Start to ask them kind of what they're passionate about. Are their values aligned? Do they have diversity and women on their team? Diversity from just not only gender, but minorities. Start to look around and say, do the people that are managing my largest asset, your investments, actually represent my values?
Yeah, what I would add to that is also understanding millennials and understanding where their values lie. And in working with a lot of millennials, we're seeing that they're firing their families' wealth advisors because when they ask about impact investments, they look at them with a white stare and like they
Yeah.
have no idea what they're talking about. So truly tailoring the needs of millennials and understanding what their priorities are. There was a recent study by Deloitte that showed that 46% of millennials are prioritizing having an impact in the world before even having a family. And when you look at that, it's half of the population of
Yep.
young people want to have impact now. We feel the urgency. We know that our dollars is exactly where impact, lies. And going from at it from the investment perspective is key, but also from a banking perspective, where are you banking? Right? And I think Julie, you can definitely speak to that. Where are your dollars going when you're opening up a bank account and making sure that we ask ourselves that question is critical.
And one of the things that we've committed to as a bank is that by 2020, each of our client will have a socially responsible portfolio. They can choose not to have that, but it will be mirrored with each of their portfolios. So we are very strongly pushing that.
Yeah, I think the other thing to note is we heard it this morning on the youth panel. The millennials and Generation Z consume completely different than our generations, or the two of us. So that drives profits. That's going to drive different businesses that you want to be investing in. You want to be looking ahead, not in the rearview mirror. You still want to take the fundamentals of finance, but you want to look out to say, where are our economies going? If you look at the food sector this morning and you just look at alternative to dairy, one of the fastest growing industries, almost all of us probably use an alternative to dairy in our coffee every single morning. You as an investor can get the economic benefit of that by investing in those types of companies. This generation is going to invest that way. They're going to inherit 10 trillion beyond dollars over the next 50 years. It's an enormous amount of wealth. They're going to be the largest consumers. We as investors should be going along with their trends because they're going to drive profits.
And I would say not only being smart investors, but looking at risk management. I mean, this is really critical. I would like to end on a positive note, and that would be a call to action. So, Daniela, what should we ask of everyone here?
Yeah, I would say if you have capital, deploy it as risk capital and be active investors in supporting young ocean entrepreneurs or climate entrepreneurs at large.
I would say look at one of your portfolios and actually know what you own, and ask that question.
And I would say, where do you bank? Think about what your bank is financing because your cash is sleeping somewhere, and you hope that that cash is actually funding something that's positive in this world. So thank you very much.
Thank you.
We appreciate it.